So, Mr. Samuel, welcome back. So, as I was saying, Mr. Samuel, can you hear me?
Yes, I can.
Okay. So, as I was saying that this time zone, they overlap each other, and when you hear the word pair, you now know what it means. Am I right?
Yes, sir.
Good. So it's different currency that appear against each other. So now this, you knowing the pair you are trading will help you to know the time frame, I mean the time zone, time section, trading section that you should focus on. So fine, the market is open 24 hours. By 10 p.m. this night, thank God today is Friday. By 10 p.m. this night, the forex market will close. That is, the whole market is closing for the business of the week and going into weekend. Are you getting me? So, but because it is open from 10 p.m. on Sunday till 10 p.m. on Friday, that's 24 hours around the clock. You cannot be trading all the section. You understand? You cannot be trading all the sections. So the pair you are majoring on will determine the section you will focus on. And why is it so? Please try and pick the key points as I'm explaining. Why it is like that is because the movement, there's what we call volatility in trading, in forex market. That is the peak of the business of the day, whereby there will be a lot of transaction, a lot of activity, business activities going on, which will push the market either maybe in a buying direction or in a selling direction at a very fast rate. So that's why you have to know the time zone. You even need to know the time it's opening and the time it's closing. Do you understand me?
Yes, sir.
Mr. Adre, are you back?
I'm with you, sir.
All right, good. Can you see us now?
Yes, I'm seeing the screen now.
Oh, thank God. Okay, so let's continue. You see, below are the tables of the opening and closing time for each section. So we look at it. This based on local time. We have this one is even foreign. Okay, we have the EDT. What's the full? Do I even know the full of that EDT? You can check. Let's confirm that time zone. EDT time zone. Let's see. That's standard for Eastern Daylight Time, which is the Daylight Savings Time, DST, for the Eastern Time Zone in the United States and Canada. So that's the meaning of EDT, Eastern Daylight Time. That's the meaning. Then we have the BST and also in bracket GMT plus 1. And what we use in Africa is GMT plus 1. Am I right with that?
Yes.
But
Right.
the one that is closer to us that we actually need is this /winter time in USA, October, like that. This local time. Now look at it. Sydney open when? 7 a.m.
7 a.m.
But in our own GMT, which is in our own local time, it is what? 8 p.m. Sydney is the same thing as Australia. Oh, don't miss it up. Oh, it's the same thing as Australia. Do you get? Then Sydney closes by 4 p.m. in their own local time. While in our own local time, it closes by 5 a.m. So which means if the pair you are trading involve the Australian dollar, are you getting me? Or if it involves any pair that is domiciled within that time zone, you will more likely to want to see what happened around 8 p.m. That is the opening of the Sydney session and towards the closing, which is 5 a.m. That's why you will see some people, the time they trade more is during the midnight because the pair they are trading is opening within that time zone. Depending on what it is paired with. If it's AUD against USD, that means you can also watch it at the opening of the New York or London section. You get? So now when we come down to Tokyo, which you want to deal with the Japan or Kong Tokyo section, on their own local time, it is opening by 9 a.m. Why in our own local time here, it is 12 a.m. So you will notice that market in Sydney opening 8 p.m. in the night. Then Sydney market has not closed yet when the market of Tokyo open, which means they have overlapped each other. Are you getting it? Please, I want us to follow along as I'm explaining. Good. Then we now look at the London Open. The London Open, because London, we are almost using the same time. The highest difference in our time frame is 1 hour. Is either we are ahead of them by 1 hour or they are ahead of us by 1 hour. You understand? So London Open, London section is even the best for us, for we that we are in Nigeria. London and New York is better for, because we will still be very much active. Sydney and Tokyo is late in the night when we'll be going to bed. When we are going to bed is when they are waking up for their own daily activities. Do you understand? And another key point. Yes. Do you want to ask a question?
No, we understand. We are saying yes, sir.
Okay, good. And another key point I want you to hold on to is that in forex trading, we will still get to that time, but just hold it in your hand now. There's what we call spread. That's the difference between the quote of these currencies you'll be trading. And that's what is the broker that determine that. It's just like their own benefit from allowing you to open a trade. Now, if you are trading, if the pair you are trading is domiciled in London or New York section, and you are going to trade it in Sydney or Tokyo section, there's always a crazy spread. You normally, when you open a trade, the first thing you will enter is negative, unless the trade be crazy sniper entry that immediately you open it, you jump into profit, but it's very rare. You will first enter into negative. And why is this so? It's because of the spread. So if it is like that, when you are trading a pair that is domiciled in London and New York section, and you are trading it in Sydney or Tokyo section, you can open a trade, and the first thing you will see is -50. Now imagine your capital that you are using to trade is no more than 50. And you now use a big lot size. You still get to what lot size is, but just be holding those key points. I'm just trying to let you know why it is important you know your trading section for the pair you are majoring on. So that you yourself as a trader, you will not be shooting yourself in the leg and making money for broker. So that's why it is important. Now, when you look at the time zone of London Open, is the same thing with our local time here, and even the closing is the same thing. You will see that the New York opening is overlapping with London. In New York, their opening time in their own local time is 8 a.m. But in our own local time here, it is 1 p.m. And you know that London will still be active, connected close to New York might open. You understand?
Yes.
London might be 5 hours ahead. New York might open 1 p.m. Omaha will close in 10 p.m. Now, if you look at 10 p.m. with what we have here, that is 12 a.m. and 8 p.m., you see that at the end of the day, all those time zones, all those trading sessions, they have overlapped themselves successfully and just keep the rotation like that. Do you understand what I've just explained?
Yeah.
Yes, sir. Very well.
Okay, good. So on the opening and closing time will also vary during the month of October, November. So I can't really pinpoint it now. There's a period of the month that New York, London will be ahead of us, and later on we will be ahead of them. You understand? So that's what this part is trying to explain. So the time might just change So you can really pay attention to that. But when you are trading London and New York, you don't really need to worry yourself too much about that. You understand? Naturally, these are the busiest time during the trading day because there is more volume. This is what I'm trying to say with volatility. More volume when two markets are opening at the same time. Now let's take a look at the average peak movement. You will still understand what peak means. We will still get there, but just pen it down. Peak movement of the major. You see, you notice one thing I'm saying in the group that is very common is that I will tell them that, oh, we already make 160 pips in profit. Oh, we are losing, like today now, the trade I called towards the evening. Initially, the market took us to a negative of minus 55 pips. That is almost close to hitting the stop loss before it now reversed back and gave us a profit. As at this night, when I post last, it has hit our final TP as 200 pips. But initial TP I called for them, which is TP1, was 100 pips, which that one has been taken out since afternoon. You understand? So you will understand the meaning of pip and why it is very, very, very important. We still get to a point where we do a little calculation. So the peak movement of major currency pair during each forex trading session. Now look at the pair. Thank God you understand what pair means. During Tokyo section, look, Euro USD, it has 76 volume that is being traded. Now look at London section, 114, which means people are trading this pair more during London section. That is, there's a high volume of transaction that goes on during London session. And if you look at it, we have Euro pairing USD. So obviously it falls within the London section and New York section more than the Asian section. So this Tokyo can still be called Asian section. Don't let anybody use English to confuse you. It's still Tokyo. Sydney is the same thing as Australia section. You understand? Then in New York section, you see 92. So that's if you go through now, see Euro JPY, that's Japanese yen against Euro. During Tokyo section, it has 102. Because you are trading, because Euro is the base currency and it's more stronger than Japanese yen, it is more traded during the New York section as well, which is 129. And during the London session, during the New York session, it is now 107. It has dropped. So when you go through, you see crazy volume that is being traded. Now, Great Britain pounds against Japanese yen, see 151. That is, there's a whole lot of volume. Yes, that means a lot of people trade Japanese yen and they trade Great Britain pounds against Japanese yen very well during London session. And that's between the hour of 8 a.m. to like 4 p.m. So that's why it is very important. So now imagine you want to be trading Euro USD. You are now going to Tokyo session to trade it. How do you want to see the volume that will give you your results? Or you want to just wait and be holding on to trade, and it will be frustrating. Then you now be seeing a market that is ranging. So it is best you know the pair you are majoring on and focus on the section that best suits that particular pair. For me now, currently the two pairs I trade majorly is GBP USD and gold. But currently I'm majoring on gold, and it's easy for me to trade because from New York session down to from London session down to New York session, that's when I'm most active, and the market favors that pair that period. Me, I've even recently I've noticed that gold moves more. It's either from at times it moves in the midnight, but majorly in opening of London session, which is around 8 a.m. to like 9 a.m. or 10 a.m. Then the next crazy movement you'll be seeing will be during the New York opening, which is from 1 down to 4 p.m. From 1 p.m. down to 4 p.m., you will see the crazy move. So these are things that you will pay attention to, you will observe by yourself, then you will know how to position yourself. That, okay, when should I enter the market? Are you getting me? So that is that. I hope we understand and I'm not confusing us at all. Are we good?
Yes,
Yes,
sir.
we are following you.
All right, good. So that's the end of trading session. I believe it is clear. If you are asked anywhere, you can boldly talk about it and use it to your advantage. So let's go to the next. What the next topic we have on the course outline? Okay, where is there's another PDF that I should have opened up. Okay, terminologies. So we talk about trading section. Good. Then the next thing we'll be talking about here is trading executing platforms. Trading executing platform. What are this one is just English. Let me just summarize it before I read the story then. Now, trading executing platform are where after you've done your analysis, where you make your decision, I want to buy or I want to sell. Where you execute the analysis you've done, where you take action. So is what we mean by trading executive platform. An example of that is very common that you've heard all most of the time is MT4 and MT5. That's MetaTrader 4 and MetaTrader 5. So now me, I prefer MetaTrader 5 because MetaTrader 4 is old version and MT5 is the updated version of MT4. Then we have CTrader, we have MatchTrader. I've used this MatchTrader very well. I use it on a pro firm and trading currently. This CTrader I've not used it, but it's also, and there are so many other ones. And even some brokers, they have their own trading, their own trade executive platform. You understand? Some broker, I think I override it now. I'll show you. Let me go to my SNS account. Do you register with the link I sent to you for the SNS?
It was not going
Or
through
you've
today.
not done that?
Yes, I
I even
registered.
tried it this evening. I've not been able to do it. It was not
Okay.
going.
Maybe you can try later. All right now. So you Mr. Dre, if you've registered, have you been able to verify your account?
I have registered, but I have not verified the account.
Okay, yeah. Please do well to verify as well so that you can have full access to the account. I guess my network is bad. I want it to load up so that I can show you what I'm saying. Okay. So for here now, if I click on this and I'll just come to trade. Now it's telling me, do I want to use MetaTrader 5 platform or I want to use the SNS terminal? This is their own web-based platform where you can execute your trade after you've done your analysis. You can decide to do your analysis on it as well. But it's majorly for me, when I'm on system, I just use it to execute. You see, it has its charts, everything as well. You understand? So this is an example of executive platform. And then the one that is very common is the MetaTrader 4 and 5, which I will be showing you. We have the system version and we have the mobile version. For me, I don't analyze on MetaTrader 5. I only take action. That's why if you look at my status, you will see the screenshots I'm posting. Those are the screenshots from MetaTrader 5. You will see the video recording I did as well. The screen recording I did. They are from that's the platform of MetaTrader 5. So that's just basically what executing platform looks like. For that MetaTrader 5, I'll still do a voice. We will connect on phone where I will be showing us how to use it step by step. You understand? That the day we will do it, we'll be using phone I will now show us how to use MetaTrader 5 step by step. And I think I should have a video on YouTube that explains it. I think I should, but if not, we'll just do it again. So that is that. And if you have any question, let me know. Now we have our analyzing platforms. That's where you analyze your trade. An example of that one that is very common is TradingView. On that platform, you have so many tools you can make use of. So you will see me sending screenshots like this. Let me go to you see me sending screenshot like this. This one you are seeing is from TradingView. So this is TradingView for you. This is the chart you see me sending. So all this, how to use this platform is what I will explain, because this is where you'll be doing most of your analysis and your decision making. Most you'll be doing. Hello, please can you still hear me?
Yeah.
Okay, and you are still seeing my screen?
Yes, we can.
Okay, Mr. Sami, I'm not getting your reply. I believe you are still hearing me. So
yes, sir, I can.
Okay, good. So yeah, this is trading. This is how trading view look like. And why, for me, why I love it very well is because if I go to any system now, and probably maybe my own laptop is not with me, and I go to any system or pad or tablet, I can just sign in to this platform with my email that I'm using. This my current analysis, this my current chart, it will bring it for me exactly the same way. So I can continue with what I've done, or probably a trade and monitoring with ease. But if you are using MetaTrader 5 app, you will need to go and install it on the person system and still now start drawing all your charts, drawing your line, all those things again. But with this one, it's just as if you have it in your pocket. Anywhere you go, you have access to it. So which way it is best, and that's what I will recommend for us, and that's what we'll be using. And I will also explain how we can use it, how we can work with it to get the best of decision making when it comes to forex trading. So the next thing we have here is, yes, now we are now coming to where it is more interesting and a little bit technical. Now we have what we call pips. Pips. What is pip? Pips is just an acronym for percentage in point or price interest point. For me, I will also call it the change, the difference in price of a particular pair. Difference in price of a particular pair. And I will show you how to, okay, let me just leave it like that. So pips, when you hear the word pips, it's just the difference in price. So when I say we make 160 pips in profit, what I'm saying is that from our entry price to where the price is currently, there's a difference of 160 pips. Oh, we are in loss of 50 pips. That means from our entry into the market to where the price is now, we are in negative. That is a difference of 50 pips. You understand? So that's what it means. Just a difference in price calculated in terms of points. And that's what pips means. Do we understand?
Yes.
Okay.
Yes.
Don't worry. Don't be confused. You'll just be graphing it like that. So an example of what I'm saying is that, for example, now if the currency pair we quoted earlier, that is, or the currency is in this market is referring to should be Euro USD, is quoted earlier, changed from, look at the price. Oh, this is the initial price, 1.1200 to 1.1205. So the difference in this price is what? I'm asking us the question.
5.
5. Good.
5
So
pips.
that is the pips. Exactly. So the difference in the price is 5 pips. So this will be a change of 5 pips. So which means the market has moved from 1.1200 to 1.205. That is, the market has moved up. Because if it moves down, it should be lesser than the initial price. Abi,
Yes.
tẹ́yẹ bá fẹ́ sọ̀rọ̀ profit, ṣebí tí n bá ra nǹkan ní 200, ó yẹ kó increase lọ sí bí 201, 202, 203 lè máa sọ̀rọ̀ pé profit ni. But tó bá yẹ pé ó reduce lọ wọ bí ó yá bí 195, is that not loss?
It is.
Good. So that's pips is the difference in price of a particular pair that is being quoted. So that's just pips for you. Ẹ̀dìmú bá yẹn o, a ṣì ń bọ̀ wá sórí ẹ̀ o, a ṣì ń bọ̀ bẹ́ẹ̀ o, but just hold it like that. Now the next terms that you must know and hold, you see this pips and this lot size, they are, in short, I would say they are the most important thing that you must know. They will determine your profit, they will determine your loss in trading. These two is very important you know them. So now we have lot sizes. In forex trading, the term lot size refers to the standardized amount of currency being traded. It is a way to measure the size of a transaction. There are 4 main types of lot size. We have the standard lot size, we have the mini lot size, we have the micro lot size, and we have the nano lot size. You'll be like, which one is all this? But I would say just discard this nano. In forex trading, tó bá jẹ́ àwọn synthetic, you might consider this nano. But when it comes to currency pair, forex gangan, you only have standard, mini, micro, which is the theory that is very, very important. And you will understand it very soon. So lot size are very important because they determine the size of your position and consequently the potential gain or loss from each trade. They also influence margin requirement, which is the amount of money. Margin requirement is the amount of money that must be maintained in the trading account to open a position. Traders choose lot size based on their risk tolerance, account size, and trading strategy. Let me break down the story for you so that you will not be confused. What we are saying in a nutshell is that lot size is very important. It will determine if you are going to make profit. It will determine your loss. Another thing it will determine is that it will determine how fast you will blow your account, how fast you will make huge profit. It will determine how slow you will blow your account, how slow you will make a particular profit. Are you getting me? So all this is now based on who you are as a trader, the kind of risk you can tolerate, how big is your account size, and the kind of strategy you are using. Some people, the kind of strategy they are using is so to them, they have a good entry. That is, immediately they enter a trade, within seconds, it will start going in their profit direction. That kind of person might be using a very big lot size, or someone that is a scalper. I will just give a brief explanation on different categories of traders as well. So a scalper will most likely want to use big lot size so that he or she can make big profit. So that he or she can make good profit. Are you getting me? Hello, are we still here?
Yes, sir.
Yes,
I'm
sir.
getting.
What I just explained now, does it make sense at all?
Yes, it does, sir.
You are following.
Okay.
It does.
Okay. Oh, I hope the class is not getting boring.
No.
Okay. Mr. Dre, hope you are not sleeping yet.
I'm with you.
Okay, good. So that's just the zombie and the simplest way I can explain lot size to you. But you will see it in a clearer view very soon. I just want us to finish these terms. But you see that we are going through this, and I'm telling you the most important one that you must hold on to, you must understand, because that's what you see this lot size. Even from the explanation, you see that it is very important, because if something will determine your loss and your profit, is it not something you should pay key attention to? Then the pips as well, pips and lot size, very important, because for when you pick a particular lot size, the pip will determine the speed at which you are making the profit or the loss, because it's the difference between the prices, while the lot size is the volume of what you are trading. Don't worry, we are coming there. Spread is like I said, I think I've mentioned the word spread to you earlier. In forex trading, the spread refers to the difference between the bid price and the ask price. And what is bid price? Bid price is the price which the market is willing to buy a pair from you, or the price at which you can sell to the market. You know, what you are doing is a digitalized form of buying and selling, but we are only dealing with currency. It's not like we enter bata aban e-commerce. We are selling currency, but in digitalized platform. So what the amount the market is willing to buy from you is what we call bid price. While the ask price is the amount, is the price at which the market is willing to sell to you. You understand? You know, you are not seeing the physical person you are selling or buying from. It's the market that does that. So the amount tí market bá fẹ́ tà òun ni ó gbé jáde, and the amount tó bá fẹ́ rà náà ló máa gbé jáde fún wa. So the spread represents the broker profit in executing trade. Broker typically do not charge a separate commission for executing trade in the forex market, but they make their profit by marking up the spread. So Olufemi is selecting broker as well. You must look at their spread. If you are trading a particular pair that is domiciled in the London section and you are trading it in Tokyo section, at that period the spread will be crazy. That's when you will open a position. I'm speaking to you from a first-hand experience. I was trading a pro firm account. If you check my YouTube, you see one of the pro firm fundedness that I make a withdrawal of almost 1K from it. There was a night around 10 p.m. or 11. I just opened the position. The first thing I saw was minus 45. And I made use of standard lot size, which should be one lot size that night. I saw minus 45. I was like, and now the pro firm has the rule that I must not lose a particular amount in a day. So imagine you are asked not to lose $200 in a day, and you open a trade, you just open it, you don't see minus 45. Won't you be panic? So that's why it is important you understand these little things I'm saying, so that you will know that okay, trade me. Section to force that journey. Don't let me even disturb myself by going and trade it in another section to avoid this kind of story that touch. Do you understand?
Yes, sir.
So okay, good. So that's what spread is. This spread of a thing, you don't need to crack your brain about it. Leave it for broker. Àwọn number version permutate on their own, but you can always check for it. Please, some things I'm saying now, remind me when I'm explaining how to use MetaTrader 5, so that I will show you where you will see it. Let me even check. You can search online here. spread on pairs. Let's see if we'll go for an image that we can. You see now. So you will see it somewhere here. So this is 1.5. This 1.5 now, you will now multiply it by your lot size to know what will be deducted when you open a position. Let me go to another one. CHF. You see USD against CHF. This 0.9 is the spread. I'm trying to. Let's go for another image. Okay, good. So you see the calculation of this spread now. This is the quote. This is the code, the price the market is presenting. This is the price the market is presenting for GBP USD. Now, the pair that is before that comes first is what we call base currency. Don't forget that the pair that comes first, the currency that comes first in a pair, the pair is these two. So the currency that comes first in this pair is what we call base currency, while the one that comes second is what we call counter currency or quote currency. Now, to calculate the spread, you see spread is equal to this, which is the counter currency, minus the base currency. You see, it's 2 pips. So which means if you are using, for example, if you are using standard lot size, which is 1. So for you to know the spread, it will be when you open a position, it will be, that will be 20. So the first thing, when you multiply, because when you are using standard lot size, in terms of money, it is $10 per piece like that. So for you to have 2 pips, that would mean immediately you open your trade, the first thing you will see is minus 20. Confused. Hello, please respond. I want to hear from you.
Sorry, minus 20 because is it because the counter is above the base currency?
No, from this spread calculation, you know that when you subtract this from this, you get 2 pips difference. That's the difference between them, yes. which is referred to the spread. You understand?
Yes.
So, and you know that the spread is what the broker use as their own profit for helping you to open a position.
Yes.
Good. So that's why when you open a position, you first of all go into negative. Now, for you to now know what that negative, what these 2 pips will mean in terms of money is where you go. Hello, can you hear me?
Yes, sir.
I can hear you now.
Okay. So I'm saying that for you to now know what these 2 pips will mean in terms of money, you know what you are most concerned about is how much am I making and how much am I losing. So for you to know what it means in terms of money is when you now bring the lot size you are using into it. So, and I'm now giving a scenario that let's assume you are using a standard lot size, which starts from 1 lot size, and in terms of money, that 1 lot size, it means $10 per pip movement. That is, the market about move 1 pip. Can you hear me?
Yes.
So I'm saying that if market move 1 pip and you are using small standard lot size, that is $10 per 1 movement on the standard lot size.
Okay.
So now let's assume you now open this pair and the spread is 2 pips. So automatically you are having minus 20. So whatsoever capital you have, your minus 20 from there now. That's what you will see.
Okay.
So that's how you will see your spread. When you see the quote like this, you will see your spread. I'm coming. Let me go to share. Okay, good. See, look at this top corner. Can you see where my cursor is? Share and screen.
The right or the left?
Move your cursor. Okay, I've seen your cursor.
Okay, I've seen it.
Yes. Every BT arrow here, whatever will go to indicate okay, my book or spread. Can you see that?
Yes.
Yes.
Oh yeah, good. So you will see that the spread is fluctuating. It's not static.
Yeah.
Will not change. So currently, 0 is 0.3. This means that the current spread of this pair of gold against US dollar is 0.3. Ocean fluctuate. So if you pick buy or sell now, depending on the lot size you use, broker ma calculate the spread tí wọ́n jáde kó bẹ̀. Do you understand? And do you know where you can see your spread on the chart now?
Yes, sir.
Okay. Please don't complicate it. It's simple. There are some things that you don't really need to worry yourself about, but it's just necessary you know where you can see it. So let's continue. Okay. So that's just spread for you. Then we now have stop loss. Most of the time when I call trade, I will give two things. I will give stop loss and take profit. So when you see me writing TP, it means take profit. And when you see me writing SL, it means stop loss. And what's the essence of stop loss? Stop loss is just an order that you give to your broker that, okay, I'm making a decision to buy or sell this pair. But in case the market, like I said from day one, that this business is a probability business, not a certainty one. So after you've done your analysis and you decided that you want to take a particular action in the market, that okay, I want to go for a buy. Now the next thing is that you will calculate. You need to know how much are you willing to place on the table. I mean, how much are you willing to let go in case the market does not go as planned. That's why no matter, you will not see me calling a trade without stop loss. I might call a trade, you might hit a 50 PC, but you will never see me call a trade without putting SL, which is stop loss, because it is very important so as to protect your capital, so as to manage your risk. If you are hearing risk management, one of the key factors of risk management, in short, one of the things that decide risk management is stop loss. So you see in this explanation, it is the risk management tool used by traders to limit potential losses on a trade. Do you understand?
Yes, sir.
Yeah.
So you know that stop loss is also very important. You can even leave your TP open, flow as long as it's going your two direction, and you now close it manually. But why it is important you also apply TP, that is take profit, is, for example, the market can move speedily and go into your zone. Imagine you place a trade and the market goes in your direction very fast. You did not now put TP. Ó wá ti débi tẹ́ ẹ ti ní lọ́kàn pé tó bá dé price yìí máa close ẹ̀, ó wá débẹ̀, ó wá sáré reverse padà. And the market now decide that it's not going to that point again. Won't you be pained? So that's why it is important you put your TP as well. So these are the things you must put in place before you even click buy or sell. You must know the amount you are risking for how much gain. So tí bá fẹ́ lọ market pẹ̀lú 2 naira, at least ó kéré jù, you might decide that ó kéré jù, I must be able to make 2 naira back, or I must be able to use that 2 naira to make 4 naira. So the 2 naira you are bringing to the market should be your stop loss. Why what you are expected to make, the 4 naira you are expecting to make, you are hoping to make, will be your CP, take profit. Ṣé àlàyé yẹn yé wa?
Yes, sir.
Yes, sir.
Good. So that's just stop loss. And you see, stop loss is another that is essential in forex trading, because Please call. Please, sorry. Hello. Good evening. Yes, I'm fine, but please, I'm in the meeting. I just pick up the call because I don't have the contact. All right, thank you. Now there is TV the call, Jare. Let's continue. So, like I was saying, okay, I was trying to read what we have here. They help traders to control and protect their trading capital. Without a stop loss, a losing trade could potentially result in significant loss. In short, you can potentially wipe off your account if you are holding on to a losing trade without stop loss. So most of the time when people blow their account, it means they intentionally expose their account to loss without they didn't put stop loss, they didn't calculate the loss, what they were willing to risk before they go into the market. You understand? So that's why at the end of the day, if the market does not go in that direction, it will wipe off the whole account. So by then it was zero till so work remain in the market, automatically broker will close them out. So that's why stop loss is important. Don't forget, I've been hammering on something that are important. Please note them and put them to heart. Now we have TP. I've explained that one, so I don't need to draw much on it. Then we have some limit orders. This limit order, you'll be seeing how they work when I explain MetaTrader 5, how to use it. So, but just for understanding sake and just to know it ahead of time, limit order are instructions given to broker to execute a trade at a specific price or a better one. We call them pending orders used by a trader to enter or exit market at the desired price level. There are two types of limit orders. We have the buy limit and we have the sell limit. And there are another orders that we have. We have the buy stop. It's not in this note, but you will surely see it when you download. Okay, now you can now download MetaTrader 5 on your phone. Download MetaTrader 5 on your phone. So we have sell limit, we have buy limit, and we have sell stop, we have buy stop as well. How to use all these tools, I will explain it in details, but just know that we have. So what does buy limit use for? Now, for you to use buy limit, it means the price of the market has ahead of you. Now, I don't know if we followed this particular trade I called. This particular trade, I don't know if we followed it. Now, you will notice that when I send this signal to the group, price has not reached this level. This where the market activates. I will go to the group. Let me go back to previous where I called the trade. Okay. No.
I've downloaded MetaTrader.
Okay, you downloaded it already. Good. Yeah, just have it on your phone like that. Now, you look at this trade though. I want to see where I call this trade. Okay, new possible buy entry for my new possible entry for a buy is at this price. Good. A buy, look at it though. My new possible entry for a buy is, I now gave the price. Are you getting me? And I put stop loss and I put TP there. Good. You will see that at that time the price has gone up a bit. Let me see. Okay, the price is still up, has not gotten to that entry that I projected. So in this kind of instruction, what you are expected to do on your executing platform, which is your MetaTrader 5, is that you use buy limit. Because what you are saying to the broker is that, okay, market has already gone up, but I want to wait for it at the lower price. That is, market ti lọ, okay, for example, nísìnyí right, wọ́n ta epo ní 1.5. You now told your broker that ìgbà tépo yẹn bá dé 1,000, ìwọ ṣẹ̀ṣẹ̀ fẹ́ ra tiẹ̀. That is buy limit. You are giving a future order to your broker that when price gets to 1,000, that's when you should activate my order for me. So that's buy limit at that point. I hope we are understanding how it works now. So that next time when you see me and I write something like this, that where is it? And I write something like that, okay, entry for a buy is so. And you look at the chart that I sent that position, you see that when you see this kind of drawing, that the green is wider up and the red is short. This red zone you are seeing is my stop loss zone. Is the risk is what I'm risking in the market. Why this green is my potential profit that I'm hoping to make. So we try to clarify the picture by understanding me. Are you with me?
Yes, sir.
Yeah, which
Yes, sir.
Okay, good. So what you will use in this kind of session is just your buy limit order, because from the picture that have been sent to you is pure that the person sending the signal is projecting a buy. So and the price is already above and already gave an entry price. Now you will see that this one is different from, there's another one. Look at this one. I said buy SAUSD now. In this kind of situation, you have to use market execution order. You have to use market execution. That is, you have to execute the trade immediately. Just go to your MetaTrader 5, click on buy on this particular pair instantly. You don't need to wait. You don't need to wait for market to get your entry or to a particular price. It's totally different from the one we saw initially. Okay, good. So now you will see the difference between a limit order and you executing the trade instantly. So that's just the pure difference. So that's what has been written here is trying to explain. That, okay, let's just read the story. The buy limit order is placed below the current market price when you expect the price to decrease before increasing again. It is used to enter a long position. You will see, you cannot use it for a sell. It's when you want to long. And yes, thank God that this statement came in. Now, in forex trading, there are some terms they use synonymously. When you hear buy, when you hear long, low for long and no buy long. Yes, good. Buy, long, bullish, they mean the same thing. All what they are saying is that they want to buy the market. When you someone is telling you, me, I long SAUSD or I long Euro USD, what the person is saying is that mo buy. Okay, I'm bullish on SAUSD. What the person is saying is that I'm optimistic that SAUSD will buy. So those three words, they use them synonymously. That is buy, long, and bullish. Now, on the opposite side, which is sell, when you hear sell, short, and bearish, they use them synonymously too. So it means the same thing. When you hear, oh, I want to short this market, it means I want to sell it. It means, oh, I'm bearish on this market. Show you what?
When
No, at all, sir.
No, sir.
All right. So anyway, since I'm giving us extra bonus because we are already 15 minutes above our normal closing time. So that's just what this limit order is. The same thing for the sell. So for you, if you are selling and you want to use a sell limit order, that means the market must have gone below the price you are expected to enter the market. So you are expecting the market has to sell already. Now you are expecting the market to buy back into your entry. Then you now continue selling. So let me see if I can see an example of that on the chart. Let me see. Okay, for example now, yes, this was a trade I called. Was it not yesterday? Is it yesterday or day before yesterday? Now you see that this market has already sold from this top down to this level. So if you now want to enter the sell, what you've analyzed is still telling you that this market will still sell low. All what you have to do is now your pending order, which is your sell limit, will be somewhere here. So that if the market buy back, it will activate your entry. Then you can now continue to sell in your projected direction. But if you now say you want to use sell limit, you are now putting it here. Can work? Are you getting me? The system will not activate it for you.
I'm sorry. Question, sir.
Yes.
So from this particular chart I'm looking at now, from where
yes,
the thing sold that highest point.
From here, right?
Yes, from that highest point. You now said if it gets to this other lowest point, this point now.
Yes.
Mm-hmm. So at that point, the question I want to ask now, if you come into a market, you see this now, at that point, what will be your interpretation? Is it that the market will still go up or it will still come down?
Yeah, see, you've asked a very good question, but currently what we are doing is just knowing the terms that is associated with forex trading. When we get to the real practical class, that is the technical analysis part, you will understand what you have to look out for to know if this market will buy. Immediately it got to this point, it started buying. This green, okay, let me just quickly check this. This green, when you see green candle, for me, you can change your own color, but for me, this green candle represents my buy, while the red candle represents my own sell. You have liberty to change the color, but I don't want to dwell on how to use this platform now. You understand? So there are some things you will look out for. There are some pattern, there are some candlestick you will look out for that will not indicate to you that, oh, this thing should buy from this level. But when you now look, there's now another thing we call overall view of the market. What has been happening in the market before? That one will now make you to know that, oh, this buy is just a short buy. You will notice that when I gave this trade call that this market will sell, I told us that, oh, we've seen a double bottom, a double top form. Let me even see where I explained that. Okay, here you see, since the market failed to activate our entry and it created double top pattern. Yeah, these terms I'm using now, I want to buy signal but me, I'm just trying to explain for, let me say, my own clarity and sincerity sake. Normal, I want to buy signal tí wọ́n ní pé ìgbà wo ni ká wọlé, ìgbà wo ni ká jáde. That's what they want to know. You get? Kò kàn wọ́n pé bó ṣe rí signal tó sense wọn, nǹkan tó look out for tó fi rí, kò kàn wọ́n. You get? You see that I was explaining that, oh, what I cited was a double top pattern, and the neckline has been broken. A retest of the neck. You see all these jargons yìí kò kàn wọ́n. Irú àwa báyìí ta really fẹ́ understand nǹkan tó ń ṣẹlẹ̀ la máa mọ nǹkan tí mo sọ bí. And all these things I'm saying will still be new to you, but when we get there, you will understand. So your question now, I can't really answer you in detail because you will not comprehend what has taken place. Now, if I say what I saw here is double top, This is it. This is the top I'm talking about. Look at this level. Here, there was a rejection. Market came back to the same level and got rejected. And that's what formed the double top. Àbí ṣé nǹkan táwọn wọ́n bí kò jọ double top.
Okay. Ojo.
So, and where I said the neckline, this is what I mean by the neckline. Ibi tó ti form M yìí, ibi by base yìí gangan tó fi form M yìí, you will see that this second cell broke this neckline. Ó break level tó fi form M yìí, ó break ẹ̀ wálẹ̀ tán, then came back to test it. Tẹ́ bá wo bí tí market ti bẹ̀rẹ̀ sí sẹ́ padà, ẹ̀rí kó bá ìwọ neckline yẹn ni. Àti bẹ́ẹ̀ ló ti bẹ̀rẹ̀ sí sell, and this is where I call the signal. Tẹ́ bá lọ wo chart yẹn again, ẹ wo ẹ ti ẹ bá wo picture kejì, ẹ ti rí pé bẹ́ẹ̀ mo fi entry sí. As at this current chart, ẹ rí pé market ò tí ì débẹ̀. So irú position yìí, nǹkan tí mo expect ká lò is sell limit order. Ẹ ti rí bí gbogbo ẹ ṣe wọnú ara wọn. So now look at this picture now. Ẹ wá wo ìgbà tí market wá play out, ẹ rí pé bẹ́ẹ̀ ló ti activated, then it sold. Tàwa dẹ̀ wo movement tó fi sell láti bẹ̀ yẹn sílẹ̀. This 210, ó kéré jù ó ṣe 211 pips movement. At least by now you already have an idea of what a pips is.
Yes, sir.
Good. So ẹ rí mo ṣe catch signal tí mo send sí group ǹjọ́ yẹn. But don't worry too much, but just start ẹ mọ̀ ẹ̀kẹ́ ó máa trigger yín láti máa ronú pé okay nǹkan tó ń ṣẹlẹ̀ ní okay ó dà pé nǹkan tí ẹni yìí rí ni. You start questioning. Next time you see any picture I send to the group, you're able to do a little bit of breaking down of what is happening. I hope you are getting something valuable in this class.
Yes, we are getting now.
Okay, good. So that is that. I hope I answer your question a bit.
Yes.
Yeah, all right. So that is that. Then we have balance. So balance is the amount or the capital you have initially. Then we have what we call equity. If we look at my status, status me, try and observe something. You will notice that the balance is constant. The balance does not change. If you status to need video new to get video, observe that ẹ máa rí pé balance yẹn dúró ni. But below it, there's something that is fluctuating, that is going up and down. That's where you have your equity. And the difference between balance and equity is this. Balance is your capital that you have as at that time, as at the time a trade is running. Ó was static ni, that is capital tí mo gbé wọ $100 mo fi bẹ̀rẹ̀ trading yìí, $100 yẹn máa wà ńbẹ̀. Now equity is what will be showing you the increase and decrease in your balance. It will be showing your the increase and the decrease in your balance. That's where you will see equity. Equity refers to the current value of your trading account, taking into account both the realized and unrealized profits and also the losses. So, for example, now, tẹ́ bá gbé trade, ó máa bọ̀. Ó lè kọ́kọ́ wá lọ profit, kó tún lọ loss. So that's what we mean by realized and unrealized profit. As long as you have not closed it, it will still be between realized profit or unrealized profit, or realized loss and unrealized loss. Shoyewa.
Yes, sir.
Or immediately you close the trade, or bóyá trade yẹn trigger stop loss ni, or trigger take profit ni, it will have instant effect on your balance. And at that point, both your balance and your equity will be the same. Shoyewa.
Ben.
Let me go to my status and see again wo oníkan tí mo ṣe video tí mo ti close. Okay, good. Now, ẹ wo 1, 2, 3. Okay, ẹ lọ wo status mi, third to the last one. Third one to the last one. Ẹ lọ wo. You will see the fluctuation I'm talking about. You will see that the balance is static at 209.37, while the equity is already at 350. Ó fluctuate.
Yeah.
Immediately tí mo wá close. Immediately mo close. But immediately tí mo close, ẹ máa rí pé both the balance and the equity wọ́n máa jẹ́ kan náà. Instantly bí mo ṣe close by, ẹ máa rí pé both the balance and the equity they are now the same. Even free margin gan, gbogbo ẹ wá jẹ́ the same thing. Have you seen it?
305. Yes, sir.
Good. So that is what all this grammar is just trying to explain. So unrealized and realized profit here only as at the time tí mi tí close ẹ̀ tí ó ṣì ń range. Ṣó yé wa báyẹn?
Ben.
Good. So I guess that's just the main thing. Then we have margin. So this margin is what you need, like a particular amount you need to have your account before you can open a particular position. For example, ẹni tó ní $100 tó wá fẹ́ lo 10 lot size láti fi trade kò ní lè lo because capital tó níyẹn kò lè carry iye volume tó request fún. Kò sí iye owó tí broker fẹ́ yà tó lè fit in láti gbé nǹkan tó ń demand fún. You understand?
Right.
So that just is àwọn tó kù yìí not really necessary. You get, but you can just read them. Now there's another thing I didn't add here which we have to talk about, but kì í ṣe pé ó really kàn wá náà because broker ló máa determine it, but it's just good we shall have an idea about it. So let me ask this Mr. Leverage. So when you are after you register with SNS and you verify your account, the next thing is to open a trading account with them. So when you are doing that, you'll be required that, okay, what's the leverage you want to use? You get? So that's where leverage comes in. And what is leverage? It will be ChatGPT. Leverage is just like platform to access what normally your capital cannot access. Now, like we said something that normally forex trading is not meant for broke people. It's not meant for ẹni tí ò rí jẹ, because to open a single trade gan, it might require you have $1,000 and above. But what the broker did is that they gave we traders, especially we retail traders, the ability to access this market by loaning us a kind of money that will push us up to be able to have access to the market, and that's what we refer to as leverage. So and leverage lórí nǹkan kan ni láti lè ní pé okay mo deposit $50, mo deposit $30, mo dẹ̀ ń ráyè trade. Ṣó yé wa?
Ben.
So let's look at what leverage in forex trading. So in forex trading, leverage is the ability to control a large position with relatively small amount of capital. You see that nǹkan tí mo sọ náà ni ChatGPT sọ. It allows traders to multiply their exposure to the market without needing to put up a full value of the trade. Without necessary to put up a full value of the trade. Now, the key concept of leverage in forex, leverage is expressed as a ratio such as 50-1. Sorry, please spare me some minutes, please. Please, I'm sorry. I'm back. So basically, that's just what leverage is, and it is being expressed in terms of ratio, like 100 to 1. You see 1 to 100. SNS will give you 1 to unlimited exposure. That is, a leverage of 100 to 1 means that for every $100 in your account, you can control 100. For every $1 in your account, you can control $100 in the market. You understand? That is what $100 is capable of doing in the market. With your $1, you can do it. That's the essence of this 100 to 1 ratio. Do you understand?
Yes, sir.
So that just leverage for us. So, and different broker, they use different leverage. SNS, they need 1 to unlimited, only unlimited leverage one. So that's why you will see some people be having the ability to flip 100 to like 1,000, 2,000, 5,000, 10,000. It's because of the leverage. They will now be able to use a very big lot size that normally we low. They should not be able to use it on a normal scale. But because the broker has given them that leverage, they will now be able to use it. Now, what's the side effect of this, of having this leverage, and you are exposing your account with big lot size, is that you can easily blow the account. Blow the $100, you are using like 0.5 and you are trading gold that is crazily volatile. So within seconds, it can wipe up the account straight. And within seconds, it can give you crazy profit if it goes in your direction. Do you get me now?
Mhm.
So don't let me bore this class too much. I believe you've understood a lot. Is there any question you would like to ask before we close? Then come on, our next class should be on Monday. So on Monday, we'll be starting. Okay, let me look at the course. Let me look at the course outline now. So on Monday, I've talked about square. Okay, good. Then we'll now be starting with the forex market analysis proper. So the first thing I will want us to do on Monday is I will show us how to use. I will explain MetaTrader 5 to us. That's what we'll be doing on Monday before we now go into the analysis aspect of it. So, do you have any question?
No, sir.
Mr. Dre,
No
any
question.
question?
No question from here, sir.
Okay, good. So I will assume and I agree that we all understood what we did today.
Today's one, don't enter.
All right, good. Okay, now do have a wonderful night rest. See you on
Thank you.
Monday.
Good night. Yeah.
Yes,
Bye.
boss.
Good night, sir.